you cannot ignore these current dollar macros. Let's break them down. Right now, price action just like, we're not doing too much. Okay. Dollar's been edging to the downside a little bit here, as you can see. Okay. We had a day in the red yesterday. There was nothing at all technical, nothing fundamental behind that move. Okay. Nothing fundamental at all. It was just obviously correction, profit taken after. Obviously, we've had a decent run to the upside for the dollar, so we're just naturally going to have profit taken. I always say that to you guys. When we see moves generally one direction or in a trend, you have to make way and for potential pullbacks and profit taking. On the month for dollar anyway, we're looking to finish nicely in the green. It's been quite consecutive since the commence of this year, as I explained to you guys. You know why now. Given a pushback and a repricing with rate cut bets. But June looking to be a decent potential month here for gold. So we will see. I believe that should, excuse me, for the dollar. I believe that should finish in the green this month. We know sort of the narrative why. Okay. If we look on a weekly basis, as I said, we've had 3 consecutive weeks to the upside. On a daily here, we're just sort of remaining in a bit of in consolidation mode. Okay, there's sort of not much to note there. Where the volatility will pick up, if I just bring up Forex Factory here. Okay, where the volatility will pick up. Sorry, one moment. All right, guys. Will likely be later on this week. Obviously, we've got US data in the form of consumer confidence today, but the real focus, as you know, is the Fed's preferred measurement of inflation. All right. We'll keep an eye on, obviously, that consumer confidence, as you saw today, new home sales, and on Thursday as well, the weekly unemployment claims and pending home sales. And the reason why we want to just keep an eye on this is because, you know how I've said to you guys since the late last year, markets want rate cuts. They're going to keep pressing. They're just going to look for any excuse, i.e. potential cracks in the economy. Like, oh, okay, the economy's faltering, rate cuts now. Oh, this data has just come out lower, rate cuts now. No, and this is why the FOMC have just said to people, relax yourself. The economy is still in a great place. It's expanding very well. The labor market remains tight. All of this is inflationary, and inflation's still too high. When you Just to quickly interrupt this video of another PAM update. As you know, we've been running a PAM with automated strategies for the last 3 months with our immediate TFTC members, and we're looking to roll this out to everybody, the wider community, hopefully by the end of this week, if not early next week. So stay tuned, stay posted on my socials and posted within the Discord community because those details will drop soon. But let's just quickly have a look. Just going to go over the PAM. I know people are patiently waiting for, obviously, the migration to occur. Just bear with me a moment, guys. But obviously, everything's still running very well. Strong month. As you can see here, I mean, look, if we look at the month of June, 23.66%. Okay, and we still got a few days left of the month. So potentially, well, so far, this is obviously the biggest month since the PAM's been running, which has been nice. Had a decent, since I added, obviously we had we had this little blip here, and that was the volatility of me adding in gold, strategy for gold, but obviously miscalculating on the initial entry for lot sizes. But that's fine. As I said, we're going to quickly recover that, and we very much did, as you can see here, very quickly. So picking up some nice pace there. Drawdown remains obviously within sort of medium risk range, low. I'd still call that quite a low drawdown given the percentage gain so far. You see that the pips recovery thanks to gold. So looking pretty well and solid. We just need the average win and average loss to start to balance out and minimize that gap, as I explained before. The profit factor will increase in time, but running really, really nicely. So stay posted. I know people are itching for the migration and the new details, the new PAM details. I'll have that to you shortly, but the way things are running are just looking really nice. And as I say, I will continue to optimize. Anyway, look at September pricing, right, from the FOMC, watching the Fed watch tool for September. That's still pretty high. So why I like this is because there's a decent amount of volatility that's already been priced into the markets, right, for rate cuts to come in September. So we've got a lot of room for disappointment. So if we start to see changes where inflation still remaining sticky, various indicators, there's decent room for the dollar to continue to push to the upside. Okay, a lot of decent room. I don't know why I was doing this. I mean, this, decent room for the dollar to push to the upside. Okay, you have to think about the bigger picture. Don't get, get sucked into, these daily movements of the dollar. Oh, it's coming down. No, focus on the underlying macros right now. Focus on what the FOMC recently just said. They're not happy with inflation where it's at. Focus on the underlying macros in the sense of, look, central banks have started cutting rates. The FOMC haven't. Okay, keep that glued in your head. I have to keep saying that. The FOMC have not cut rates yet. The FOMC have not indicated rate cuts are happening yet. They haven't given any time frame on that. ECB have cut rates. There's more potential cuts on the horizon with softening in economic data. The Bank of England are dovish now. They're ready to cut rates. The Bank of Canada have started cutting rates. The SNB have cut rates multiple times already. So there's already that divergence forming. Can't stress that enough. The macros are there to support the dollar to the upside. Okay? Remember, follow the flow of money. We follow the stable economies. We follow where we're going to get the highest yield on our investment. That's where the foreign funds and the big institutional funds and the real money flows are going. Okay? So I don't know why I went off on one now. It's just when people get overconsumed by these daily movements and like, the dollar's heading to the downside. This economic data is bad. That's it. No, relax. All right, so I hope you once again found some value in this dollar macro video. So speaking about those underlying fundamentals, as I say, this is just scratching the surface. We go deep into knowledge, deep into data, deep into everything that's going on in these financial markets that's influencing the asset classes that you're trading, whether it's Forex, stocks, indices, crypto, commodities, you name it. We break this all down in depth in my fundamental bootcamp course, which is available on WOP, right? Obviously, we're providing a lot of value here, and I'm sure you're taking away a ton. But if you are serious about just going up, into orbit with your trading and everyday life with that powerful macro knowledge and finding those opportunities and seeing how everything interlinks, you can check that out. But otherwise, enjoy this free value. Make sure you do subscribe, guys. And make sure you do hit that like button if you want more. Stay lit, stay blessed. Let's get it.